Hey everyone and welcome back. Is it a coincidence that we are extremely green the day after my 31st birthday and the day after we finally reach 90,000 subscribers? I don't think so. So first up, this is the current state of the market at the time of making this video. I'll show you the difference between when the market opened and when I'm filming this video, so you can see which stock actually improved throughout the day and which stock got worse. If you can actually find a stock that did get worse, I think Netflix might be one. It's down 2.4% on the news that Apple will spend, I think, $5 extra billion or so on content. To be honest, Apple content, although there are not that many shows, but the ones that do hit quite hard. So quality content is always welcome. Now, first up, thank you to all the new subscribers. We're now at 90,077 subscribers, so the road to 100,000 starts now. So thank you very much for all the support. If you're new here, hit that subscribe button. It's free. You can always unsubscribe when we hit 100,000 subscribers. Thank you very much for all the support. If you do want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. We also have to go back to this wonderful headline from April 6th. CNBC host Jim Cramer warns of Black Monday market crash over Trump tariffs rivaling record 1987 collapse. I mean, if this isn't a bottom indicator or one of the best bottom indicators, then I don't know what is. Of course, the market and plenty of my stocks, your stocks, are up quite significantly since April 6th. Now, this was, and let me remove my face right now, this was the major stocks just when the market opens. So in the healthcare sector, we did start red, and then throughout the day, well, things got a little bit greener. So here you can see the difference. Start of the day, midday, I'd say. Start, midday, start, midday. So there clearly were some shifts from green to red for some, and then from red to green for others. But we did see some, let's say, profit taking across the board, which makes sense. A lot of stocks went up 5-6%. Now they're only up 4-5% or something like that. Or they were up, for example, Amazon was up 9%. Now it's up close to 8% or so. Same with Tesla. It makes sense. Let's be honest, it makes sense. And this is something that I do want to touch on later in this video. According to the betting markets, chances of a recession is now down to 43%. It's quite astonishing what sentiment can do to a person, right? A couple of weeks ago, we were probably closer to 70% chance of a recession. We're now at 43% chance and coming down quite rapidly. Also, this is fresh out of the oven. Apparently, the US posts $258 billion April budget surplus, up 23%. Strong tax payment and record import tariffs boosted the US April surplus to $258 billion. That's more than $500 billion, just to frame it in a more sensational way. So we have here $16 billion in custom duties, up $9 billion from last year. The US collected $500 million a day from tariffs, far below Trump's $2 billion a day claim. Tariff revenue will fall as the US-China agreed to cut tariffs, US to 30%, China to 10% for 90 days. For fiscal 25, October to April, the deficit is, well, still very high. That's up 23% to $1.049 trillion. The receipts were $3.11 trillion and the outlays $4.16 trillion, both April records. Adjusted for timing effect, the deficit rose 4%. So, I mean, good start, but we still have a long way to go. Some other interesting data we can have here. Nasdaq 100 closed above the 200-day moving average after 7+ weeks, while within negative 10% of 52-week highs. So we've got here the data points from when this happened in the past, and then we can see what has happened with the Nasdaq 100 a week later 2 weeks later, a month, 2 months, etc., etc. And here we start off with odds in our favor, although it says here 50% of the time we were green a week later. On average, we were still down 0.21%. 2 weeks later, 60% of the time we were green, and on average we went up 0.18%. Then afterwards, a month later, 2 months, 3 months, 6 months, 9 months to a year later, the odds, the probabilities are in our favor and getting better, and on average we are up more and more. Looking at the S&P 500 after the New York Stock Exchange advanced decline line hits a record high for the first time in over 100 days. Here, amazing odds. If we look at a week later, 2 weeks later, same thing here, a couple of months later or a year, the odds are definitely in our favor. Plenty of times, 100% of the time, we were green. A month later, that was the lowest. It's only 75% of the time we were green, but on average, we were up 1.34%. Of course, as we've seen before, right? I've showed you this type of data. By the way, Subu Trade, amazing follow on X. I've showed you this at the start of April when things were red each and every day. And I told you, look, just because previously 60% or 70% or even sometimes 90 to 100% of the times, a day later or 2 days later, XYZ happened, we were green, does not mean that this will happen yet again. We might be the special case. And here, the same thing, right? It says here, 100% of the time, a week later, we were green. It might very well be that right now, a week later, we might be red because we are in a special situation, right? This whole tariff story, everything that's happened in the last couple of weeks, it is something special. Now, of course, if you look at the dates right here, we've had worse times than today, for sure. But things can be different. History might not repeat itself. It often rhymes. Well, in this case, it might just be completely different. Moving on to the next one, the S&P 500 after the VIX goes from above 45 to under 20. Here, we don't have that much data to work with because, again, special circumstances. Even in previous dates here, special circumstances. And here, although the odds are in our favor, a week later, 67% of the time we went green, but on average, we were still down 0.12%. 2 weeks later, 50% of the time we were green, and here on average, we were up 0.64%. So this is quite interesting, right? A week later, 67% of the time we were green, but on average we're down. 2 weeks later, 50% of the time we were green, but we're up on average 0.64%. It's quite interesting, don't you think? But speaking about what's happening right now, I'd say we've had quite a lot of days, I would say week or plus of green, right? I'm pretty sure that some of the stocks, some of the popular stocks are maybe overextended. So it wouldn't surprise me if we're going to see some red a week later, maybe a couple of days later, because people are probably taking profits. I know, and we've seen that in the previous data as well, retail has been buying quite a lot in the last couple of weeks. So maybe retail is saying, look, for once we made quite a lot of money and we might actually sell to secure some profits. Might very well be, right? Because why not? Why not? We could have experienced a V-shaped recovery. Now, this is an example of a V-shaped recovery for the economy. It shows you here the recession of 1953. And remember, Tom Lee, his prediction was we might see a V-shaped recovery. It did take a little bit longer than expected. Might not be a V-shaped recovery, might be a W-shaped recovery. But yes, things are going up quite rapidly. I think year to date, most of us are doing quite well right now, much better than at the start of April, and much, much better if you even bought at the start of April. Now, we have a couple of extra things here for the upcoming days. We have on Tuesday some inflation data. On Thursday, we have the PPI report. And on Friday, we've got some building permits, housing starts, the Michigan consumer sentiment, which I still believe is a bunch of bull. But okay, we'll see what happens there. Because remember, previously, right, consumer sentiment is down a lot. And then the Fed comes out with the real data. And they're like, yeah, consumer sentiment surveys are negative, but we're not really seeing that in the data. You know why? Because these surveys are politically motivated. So they don't really, they shouldn't really matter that much. Plus, if you listen to Visa, MasterCard's, American Express earnings report, the consumer is still doing much stronger than what the headlines want you to believe. Then, of course, the big reason why this is happening, I did cover this a little bit in yesterday's video in the portfolio update. So if you missed that, that's going to be in top right corner. But basically what we have here is, of course, that US-China deal discussion, whatever has happened in Switzerland. So previous tariff rate for the United States, 145%, new tariff rate, 30% for the duration of 90 days. China went from 125% down to 10%. Now, both countries will establish a new framework for ongoing discussions led by US Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng to address broader economic and trade relations. Regular and ad hoc communications between working teams are planned, with future meetings to be mutually determined. The US Treasury Secretary Scott Bessent described the talks as productive and emphasized that neither side desires economic decoupling, stating the previously high tariff rates were akin to an embargo, and neither party is interested in that. We seek trade and aim for a more balanced trading relationship. Chinese officials hailed this substantial progress and stressed that the move serves the interest of both countries and the global economy. Now, to me, the next huge step would be for US companies, especially tech companies, to be able to operate in China. I think if that happens, that would be a complete game changer. And of course, as discussed yesterday, this is just with regards to China. According to, well, I think Howard Lutnick and I can't remember the other name, there will probably be more deals announced just like the one with the UK in the upcoming weeks. So yeah, the worst might be behind us, right? I think the worst of the uncertainty might be behind us. But here as well, don't forget, this is just a 90-day pause. So throughout the 90 days, hopefully we'll get even more clarification, maybe more deals announced between the US and China. There is also the other 90 days for all the other countries. So we'll see what happens with that. Plus, we are still in the earnings season. So far, I mean, the companies that were not certain what's going on, I would assume that if these deals and if this new tariff rate does stay in place, of course, the worst case scenario is just off the table. And most of these countries will have just an easier time 3 months from now to report earnings. Just like, remember, 3 months ago, plenty of companies' guidance was a miss because of a strong dollar. This dollar did weaken, and now we've got plenty of beats because of the FX headwind that turned into a FX tailwind, which is something that I've talked about time and time again. So most of you are probably not that surprised anymore. And so right now, what do we have? We have this beautiful picture, greens across the board with some red in some specific sectors and names here. But to me, I mean, I'm quite happy with the moves that I've been making the last couple of weeks. I don't really think I will be taking profits anytime soon because I didn't really make that crazy bets at the start of April. I've just added 2 positions that I wanted to build up, some newer positions, some more established ones as well. So I'm quite happy with that. Of course, if we continue to see heavy movements on the way up, and then I feel that we are maybe in a short-term euphoric mode, then yes, then maybe I'll start taking some profits like I did at the start of the year when things just didn't make that much sense. But right now, I'm quite happy with the positioning of the portfolio, with the positioning of certain companies. I did add some cash to the portfolio, so I'm happy with that as well. So yeah, all in all, that's about it. And of course, if you do plan on taking profits, there's no shame in that, right? You are securing profits, which means you are securing gains in your pocket. You will not lose that. Should not be ashamed of taking profits at all. I'm not saying you should be doing whatever you want to do, whatever's most responsible for you to do in your portfolio. But I'm definitely saying congratulations to all of you that did take the opportunity to buy quite a lot of shares of great companies at amazing prices. You did exactly what everybody has been saying for many, many years, but only a few act, and that being greedy when others are fearful and fearful when others are greedy. and buy when there is blood on the street, even if that blood is your own. Remember that the next time, or just tune in to this channel because, well, we did talk a lot about that, especially at the start of April. Wasn't fun, but I think looking back, we are quite happy with our decisions. So anyways, that's all I've got for you right now. Again, thank you very much for 90,000 subscribers. If you're new here, hit that subscribe button and I'll see you all in the next one. Bye-bye.